What's up, YouTube family? The election is almost over and we need to know where the top places are to park our cash to make a good return. I've done the research today and want to discuss 3 slam dunk stocks and 1 honorable mention if Biden wins. These are stocks you aren't going to want to miss if you want to get stupid rich. And for the new folks, I'm Henry, ex-Goldman Sachs, Wall Street trader, graduated Drexel, and have a degree in finance and analytics. And I like to talk about stock market and educate others about making smart money decisions in the stock market. Weekly Options Income Academy teaches people from scratch proven methods to earning more money with options and generating a consistent weekly income. It teaches you stocks too, but I focus on selling options so you can get paid. The program closes in just 2 days, so make sure you check out the link in the description. If you're outside the US or you're going through some tough times, just message me on Instagram and I'll do my very best for you. Okay, that being said, let's jump into the slam dunk stocks that look attractive to dump our money into right now. A lot of these stocks are long-term growth stocks, and I want to discuss how they will benefit from the post-election times that we are in or about to be in right now. Number 1, we have Spotify. Spotify dominates the subscription audio streaming business globally, ending September with 320 million monthly active users or MAUs, including 144 million paid premium subscribers. Both of those figures grew a rapid 29% and 27% respectively compared to the year prior. If Biden wins and the country stays closed a bit longer under his enforcement, then you can be sure that people will need entertainment. Now, this stock is not only growing its user base extremely fast, but it's a fully digital business, so people can download it anywhere, including their home, car, indoor, their home gym. It really doesn't matter. Whatever the case is, the business model is conducive to a lockdown. Let me tell you something about the subscription audio streaming business. We have 3 billion payment-enabled smartphones in Spotify's market currently. Take a guess, please. Take a guess at the biggest opportunity for NIO and Tesla currently as well. Yep, you guessed it. Spotify is not currently competing in China, and that is the biggest market opportunity for Spotify. Imagine a culture that uses smartphones religiously with over 1.4 billion people in a growing economy gets introduced to Spotify. That's a recipe for a $500 billion company, which would be a 10x growth rate from Spotify's current valuation of $46 billion. Don't make me bust out the DCF model. Well, actually, if you do smash the like button enough times, I suppose I could bust out the DCF model for you. I also like that if you look at the 1-month chart, they are bouncing off of lows and it looks like the momentum is really shifting. The only downside in this stock is the high royalty rates it's required to pay the music labels and other rights holders. That makes it more difficult for Spotify to get a lot more profitable in music streaming. However, in the ad-supported segment, Spotify is growing its supply of owned and exclusive podcast content, and podcasts are growing extremely fast, and it's a very specified niche that's very profitable for someone like Spotify. By the way, let me know what podcasts you guys are listening to right now, because I do need to start a new one myself. Now, moving into the second stock, it's an absolute get stupid rich stock, and it's on a monster upswing. Take a look at this chart. Qualcomm looks like a missile. Qualcomm is a semiconductor maker and intellectual property powerhouse. Property powerhouse. Semiconductors, because I didn't know for the longest time, is the technology and material behind chips, similar to NVIDIA and AMD. The main reason Qualcomm is exploding, and I'll get to why it will continue in a minute, is heading into earnings day. Analysts had forecasted that Qualcomm would earn a measly $1.17 per share pro forma on $5.9 billion in adjusted sales. And what do you know, as it turns out, Qualcomm earned 1.45 on sales, which is a very significant difference on $6.5 billion. The analysts were wrong, $600 million away from what they expected. Summarizing the results, Qualcomm CEO Steve Malcolm, I'm sorry, I'm gonna butcher that last name, called Q4's numbers exceptional and said they demonstrate that our investment in 5G are coming to fruition and showing benefits in our licensing and product businesses. There you go, 5G, count them, 1, 2, 3, 4, 5. That's the reason they had a blowout quarter and why they will continue to have massive growth going into the future. I am one of those people that prefers to have a simple life, and being a minimalist, I'm not a fan of 5G because, you know, health-wise, I just don't fully trust it, but the money, oh boy, the money, it's going to be absolutely insane for investors. So I guess there's some drawdowns, but there's also some really big benefits if you're investing in something like Qualcomm. Qualcomm is the biggest maker of chips that connect smartphones to wireless networks. That makes the company's outlook a key indicator for the smartphone industry. Qualcomm has previously predicted rising demand as consumers trade in the aging handsets for the new 5G devices like the iPhone. And guess what? Who isn't buying the latest iPhone from Apple? Qualcomm gets the bulk of its profits from licensing patents that cover the fundamentals of modern phone systems. The company charges a percentage of the selling price of each handset or phone, we'll just call it phones, payable by phone makers regardless of whether they use its chips or not. QTL is its licensing business, generating sales of $1.5 billion, up 30% from a year earlier. Chip revenue jumped 38% to $5 billion. So Qualcomm is essentially growing at the same speed as Tesla due to the heavy technology adoption and use among society. This is a stock that you're going to want to have in your portfolio regardless of the election, and especially if Biden wins and the lockdowns are longer than expected, because that's going to benefit smartphone sales. Last but not least, we have Upwork. This is a darling pandemic work from home stock. It's up a monster amount. Just look at the chart. What I like the most is the market cap sits at under $4 billion. So this is actually a small cap stock. Now, the company is a freelance work facilitator. What that means is you have something that needs to be done and they have freelancers for you. Except they are kind of like Uber in that they are just a platform that meets the two people looking for each other together. The reason this stock is up so much recently is again due to the earnings beat. Instead of bringing in $90 million as expected, they brought in $96.7 million for the quarter. A lot of people are starting online businesses this year, and that is really benefiting the company. With new entrepreneurs starting, there is many others there to help them with their services and gig offers. So on Upwork, you can hire editors, logo designers, writers, proofreaders, marketers, and even people trying to give you financial advice and investing. LOL. The internet is a business because each website costs money. Therefore, there is tons of opportunity around this field. Upwork is a perfect middle position, helping both parties and taking a fee for it. Here's an image of their website. Whoa, that is kind of cool. This is a stock that's going to print money for a while because I don't see the digital economy going anywhere but upwards. Freelancers are also going up because they have more flexibility to work from anywhere they desire and they don't have to have a boss. That's pretty much why I trade options as my main source of income, and I also teach others how to do it because I don't want to have a boss either. Yeah, not my thing. Look at Option Income Academy. Aside from making your money work for you with the knowledge that you have about the markets, the next most lucrative thing is selling digital services like software engineering and mobile development. So Upwork is basically winning on all fronts because software engineering and mobile development are so prevalent on the online freelance space. The only thing I want to say briefly is that they have some competition from Fiverr. Looking at this image, you can see Fiverr is much smaller than Upwork, but are growing at a much faster rate. In fact, Fiverr grew 42% year over year, but they're only bringing in 1/3 of Upwork's revenue. However, the reason I chose Upwork rather than Fiverr, despite them growing faster, is the valuation. Fiverr currently trades for 16.2 times trailing 12-month sales. Upwork, on the other hand, has a price tag of just 4.2 times trailing 12-month sales. All right, last but not least, I just have an honorable mention, NIO. I'll have a whole video on NIO, and they're going to crush it, as I mentioned. NIO has a competitive advantage in China, and they just crossed a milestone of 5,000 vehicles sold in a single month. They're also being helped by China, which I will discuss in a separate video. The stock is blowing up mind-blowingly fast, and it's come to a point where I made a DCF model, and within a week, exactly as I said, $43.95 happened. How does that work? I guess I'm pretty good at being a financial analyst. What can I say? I'm taking a hard look at it right now though, and at these levels, I just can't imagine it continuing to ride higher, at least not for a very long time. But for that, I'm gonna do a little bit more research. I'm gonna do a deeper dive analysis in the next video because this all just happened pretty much today. Don't forget to check out the weekly Option Income Academy if you want to make a consistent income using options. I love you guys. Thank you for watching, and I'll see you in the next video. Be aggressive in learning, but be safe in investing. Спасибо большое. Fist bump.
No one ever sees me, I'm losing every battle. No one ever sees